Welcome to your deep dive.
Glad to be here.
Today, we're getting straight into the latest from Robinhood Markets.
Yep, their Q1 2025 financials just released May 1st.
Exactly. We're going to unpack the key stuff from that report.
Cut through the noise, get to what matters.
That's the plan. Give you a clear picture of how Robinhood's doing, what's driving things.
And maybe what it signals for investing more broadly.
Right, without all the heavy jargon.
Yeah.
So let's jump in. What's the first thing that caught your eye?
Well, the immediate headline for me has to be the exceptional growth year over year.
Okay.
Revenue surged by 50%. That's huge. Up
Huh.
to $927 million.
Wow, 50%. And is that translating downwards?
It absolutely is. And that's what's really significant here. It's not just, sales. Net income jumped 114%.
114%.
For $336 million. That kind of increase, it really suggests some serious momentum.
Absolutely. And I saw something about deposits, too.
Oh, yeah. Beyond the income statement, they pulled in a record $18.0 billion in net deposits.
$18 billion. Let's unpack that a bit. What does that signal?
Well, such a massive inflow of funds, it really indicates strong customer trust, right?
Mm-hmm.
And it highlights their ability to, draw in and actually keep assets on their platform.
It's a pretty powerful statement about their appeal, then.
It is. And building on that, look at Robinhood Gold subscribers.
Right, it's a premium service.
Up 90% year over year. They're now at 3.2 million.
90% growth there.
Yeah. It tells us those premium features are really hitting the mark with users.
So it's not just getting users, it's getting them to pay for value.
Exactly. It creates this significant and growing recurring revenue stream.
And for shareholders or potential investors listening, what about earnings per share?
Also very strong. Diluted EPS up a remarkable 106% to $0.37.
Okay, 106%. So more profitable per share. That's generally a good sign.
Definitely. Plus, the board added another $500 million for share buybacks.
Oh, interesting.
Brings the total authorization to $1.5 billion, and they've already repurchased 20 million shares.
So they're growing and returning capital. Often helps shareholder value, right?
That's usually the aim, yes.
Okay, so where's all this revenue growth actually coming from? Let's break that down.
Sure. Transaction-based revenue saw a really substantial jump, 77%, up to $583 million.
77% just from transactions. What's inside that?
What's fascinating is the breadth. Crypto revenue actually doubled, up 100%.
Doubled. Okay, so maybe renewed interest in crypto or better crypto offerings.
Probably a bit of both, capturing those active traders. But it wasn't just crypto. Options revenue was also strong, up 56%. And even equities saw a healthy 44% increase.
So it suggests broad engagement, people trading different things.
Exactly. They're not just relying on one hot asset class.
Good point. What about interest revenue?
That also contributed significantly. Net interest revenues were up 14% to $290 million.
And that's driven by?
Primarily growth in their interest-earning assets, customer cash balances and things like that. Also securities lending income.
And lending out shares.
Right. Although that was slightly offset by lower short-term interest rates.
Got it. And you mentioned other revenues earlier.
Yeah, let's not overlook that. Up 54% to $54 million.
And that's mostly the gold subscriptions we talked about.
Primarily, yes.
Yeah.
Which, again, just emphasizes the success of that premium model and how they're diversifying revenues.
Makes sense. Okay, let's pivot to the users themselves. Customers' accounts. What are the numbers telling us?
Also painting a pretty positive picture there. Funded customers are up 8% year over year.
To how many?
25.8 million. And the number of actual investment accounts grew even faster, 11%.
Okay, so more accounts per customer, maybe?
Potentially. Reaching 27.0 million accounts, it suggests not just new users, but existing ones deepening their engagement.
That tracks. And what about the total value on the platform? Assets.
That figure is really striking. Total platform assets. So the total value held by customers surged by 70%.
70%.
Yeah, up to $221 billion. It's clear users are trusting Robinhood with, a lot more of their money.
Is that organic growth, or did acquisitions play a part?
Well, the acquisition of Trade PMR closed in February. That certainly played a role.
How much did that bring in?
About $41 billion in assets. So a significant chunk, definitely.
But even without that, the underlying growth seems strong.
Absolutely. And remember that record, $18.0 billion in quarterly net deposits.
Right, the 37% annualized growth rate.
That really underscores the point about increasing user trust and engagement. People are actively choosing to move funds there.
And all this activity.
Yeah.
How does it affect revenue per user, ARPU?
That's up significantly too. ARPU increased by 39% year over year to $145.
So $145 per user on average. Why is that metric important for you?
It's crucial because it shows Robinhood is getting, well, more effective at actually generating revenue from each user they have, better monetization.
Right. Okay, so beyond the core financials, they've been busy with new products and features too, haven't they?
Oh, yes. Actively developing and rolling things out.
Tell us about some of those key innovations or strategic moves.
Well, one big one is Robinhood Legend. That's their enhanced desktop platform.
What's new there?
They've added support for index options, more crypto trading features, and importantly, more advanced charting tools.
So trying to attract maybe more sophisticated traders.
Clearly aiming that way, catering to a wider range, including those needing better analytics.
Makes sense. What else?
The expansion of their prediction markets offering is also noteworthy.
Event contracts, right. Betting on outcomes.
Exactly. And the volume is substantial, over 1 billion event contracts traded in the last 6 months.
Over 1 billion. Wow.
It really indicates they're willing to explore and, capitalize on these newer forms of financial engagement.
Tapping into interests beyond just stocks and options.
Precisely. And then there's the Trade PMR acquisition we mentioned.
Right, completed in February. What's the strategy there?
That seems to be about broadening their reach, specifically targeting the registered investment advisor or RIA space.
So serving financial advisors.
That appears to be the goal. Meanwhile, they launched Robinhood Strategies.
The advisory service. How's that doing?
It's showing promising early adoption, actually. Over 40,000 customers already.
40,000, okay.
And over $100 million in assets. Suggests a demand for more guidance on the platform.
Interesting. And didn't they announce something about banking?
They did. Unveiled Robinhood Banking at their recent Gold Keynote event.
So signaling ambitions beyond just brokerage, becoming more of a full financial provider.
That certainly seems to be the direction, a more comprehensive suite of services.
And AI. Everyone's talking about AI.
They are too. Robinhood Cortex, their AI-powered financial assistant.
What's the aim with Cortex?
Looks like leveraging AI to personalize the user experience, offer tailored insights, maybe better support.
And are they still pushing internationally?
Yeah, they mentioned continued customer growth in the UK and the EU, and the acquisition of Bitstamp, the crypto exchange, is still progressing.
Okay, lots happening on the product and strategy front. Let's look at some specific trading performance highlights. Anything stand out?
Definitely. Robinhood retirement assets under custody AUC more than tripled.
Tripled.
Yeah, to $14.4 billion. That's remarkable growth in a relatively short time for retirement accounts.
Suggests strong adoption of those products.
Likely driven by user-friendly features and maybe just more awareness.
What about cash balances or margin?
Also big increases. Cash sweep balances, basically uninvested cash, up 48% to $28.2 billion.
And margin. Money borrowed for trading.
The margin book jumped 115% to $8.8 billion.
Yeah, double. Both those point to more active, engaged customers, right?
Yes, holding more cash, using more leverage, definitely signals higher engagement.
And options trading. You mentioned revenue growth there.
They hit a record 500 million options contracts traded in the quarter.
500 million contracts. That volume really underscores the platform enhancements and user interest in options.
It does. And even with crypto's volatility, trading volumes were still up 28% year over year to $46 billion.
It's still growing, despite market swings.
And equity notional trading volumes, the total value of stocks traded surged 84%.
84%.
To $413 billion. So just really robust trading activity across the board, equities, options, crypto.
It paints a picture of a very active user base. Let's talk efficiency. How did costs compare to that revenue growth?
That's another key point. Revenue growth, that 50% significantly outpaced expense growth, which was 21%.
Okay, 50% revenue versus 21% expense growth. That suggests good operational leverage.
Precisely. They're scaling efficiently.
How did the expenses break down?
Well, they managed to keep growth in areas like tech and development relatively controlled, up only 9%, despite all the investment in new products.
Right.
Marketing expenses saw a larger increase, up 57%.
Which probably reflects that focus on customer acquisition and engagement we discussed.
Makes sense, yes. And general and administrative costs were also pretty controlled, up 13%.
So overall, efficient management as they grow. Did they give any outlook for future expenses?
They provided a full year 2025 outlook for adjusted operating expenses plus stock-based comp.
Okay.
Between $2.085 and $2.185 billion. And that includes the impact of trade PMR.
Got it. So, thinking ahead, based on the report, what are the key opportunities they seem to be focused on?
Well, clearly, continued gains in market share in the retail investing space is still a big one. Their ambition to expand beyond just trading into advisory, into banking that presents another major growth avenue.
International, too.
Success in international markets, definitely. And effectively integrating AI, like with Cortex, that holds considerable promise.
And recurring revenue.
Yes, growing that recurring revenue from things like gold subscriptions provides a more stable, predictable financial base. That's key.
Okay, so if we were to summarize the key strengths coming out of this Q1 report,
Right.
what would they be?
I'd say, number one, exceptional revenue growth and that improving profitability.
Right.
2, those record net deposits showing strong customer trust. 3, successful product innovation and the growth of Robinhood Gold specifically. And 4, that significant operational leverage revenue growing much faster than costs. It's a powerful mix.
Agreed. And the key growth drivers they're banking on for the future.
Based on their commentary, it's that strategic expansion into advisory and banking.
Okay.
Capitalizing on international markets,
Yep.
effectively cross-selling more products to their existing users,
Makes sense.
leveraging AI innovation through Cortex, and successfully integrating those strategic acquisitions like Trade PMR and potentially Bitstamp down the line.
So, wrapping this up,
Yeah.
what does this all really mean for you listening in?
Well, Robinhood's Q1 2025 report paints a picture of really significant growth across the business.
Yeah, it seems fueled by that continuous product innovation.
Strong customer engagement, definitely increasing.
And that strategic expansion into new financial areas.
Right, and considering these pretty impressive numbers and all these initiatives, it does prompt an important question for you to think about. How might Robinhood's ongoing evolution
As this broader financial platform.
Exactly. How might that influence the future of retail investing? And maybe more specifically, your own investment journey and financial choices.
That's a great point. This deep dive gives you a snapshot, a valuable one, but things change fast in finance.
Constantly in motion.
So we definitely encourage you to explore these trends further. Think about how they align with your own financial understanding and, your future plans.
Absolutely.
Thank you for joining us for this deep dive.
Thanks for having me.